So Amazon just made a $36.7 million investment in a quantum computing company called IonQ. And while most people will just see that as another headline, ignoring the details here is a serious mistake. This move reveals Amazon's entire strategy for the next decade of cloud computing, and understanding it is key. Look, if you only have a minute, here's the bottom line. Amazon didn't just partner with IonQ, they bought an equity stake. This changes them from a simple customer into a committed owner. It's a massive vote of confidence that validates IonQ's technology over its competitors and gives Amazon a strategic weapon against Google and Microsoft. This isn't just news, it's a foundational shift in the quantum race. Before we get into the data, a quick hello. My name is DataCat, and this channel is just about a month old, so if you're watching this, you're one of the first to find this corner of the internet. For a long time, my job was being an analyst inside one of those massive Fortune 50 companies. My days were spent staring at data, trying to find the actual story hidden in the numbers. Honestly, it was a corporate grind. I'm an introvert by nature, so bragging isn't my style, but I traded that life for this one, a keyboard and a camera, so I can talk about this stuff without a corporate filter. I'm not a financial advisor. I'm just someone who genuinely enjoys digging into the data and sharing what I find. My only goal is to provide real data-driven analysis, not hype. So if that sounds like something you'd find valuable, consider subscribing to the channel. It would really mean a lot as we get this community started. Alright, let's set the stage. We have to talk about quantum computing. You've probably heard the term, and it sounds like science fiction, but the reason for the sudden hype is that it's rapidly moving from theory to reality. And what does that mean for you? It means these machines have the potential to solve problems that would take our current supercomputers billions of years. We're talking about discovering new drugs, creating new materials for batteries, and designing financial models that can see risks we can't even imagine today. This isn't just a faster computer, it's a different way of thinking, and companies are starting to build the hardware that makes it possible. This brings us to IonQ. In the race to build a useful quantum computer, IonQ has emerged as a leader. They use a method called trapped ion technology. I won't get too deep into the physics, but what you need to know is that their approach results in very high-quality, stable qubits. This is critical. Having a million messy, error-prone qubits is useless. Having a smaller number of highly stable ones is what actually lets you solve problems. Okay, enough with the fancy dazzling terms. Now, enter Amazon. In fact, IonQ and Amazon already had a relationship. Since 2023, IonQ's hardware has been available on Amazon's cloud platform, AWS Braket. This allowed companies to access quantum computers without building their own multi-million-dollar labs. But the recent news of a $36.7 million equity stake changes the entire dynamic. This is the part that most people miss. A simple partnership is transactional. An equity stake is a commitment. Think of it this way. A partnership is like being friendly with a neighborhood cat. You might leave out some food and it might visit you. An equity stake is adopting the cat. Now, you are financially and strategically aligned. You have a vested interest in its long-term success. This does three critical things for Amazon. First, it deepens their strategic alignment. Amazon now has influence and a direct financial incentive in IonQ's success. Second, it allows for much deeper integration into their AWS cloud platform, giving them a powerful way to differentiate their services from competitors like Microsoft Azure and Google Cloud. And third, it secures them early access to innovation. Any breakthrough IonQ achieves directly benefits Amazon first. So what makes IonQ the company to bet on? Their business model is built around providing quantum computing as a service, or QCaaS. By putting their machines on the cloud, they lower the barrier to entry for everyone and create a scalable revenue stream. The company is projecting revenues between $75 and $95 million for 2025, with a stated goal of reaching profitability by 2030. Their real advantage, their moat, is their technology. They have a portfolio of nearly 900 patents. That's an incredible barrier to competition. It's like a cat that has claimed a single best sunbeam in the house. Good luck trying to move it. On top of that, they have active partnerships with other industry leaders like NVIDIA, and the pharmaceutical giant AstraZeneca, proving their technology has tangible, real-world applications today. Amazon's investment is a massive vote of confidence that validates IonQ's entire roadmap. It signals to the rest of the market that this is a serious player. Of course, we have to be realistic. Quantum computing is still an emerging technology. There are significant challenges ahead, like error correction and scaling. It's not a guaranteed path. However, having a partner with the financial stability and platform of Amazon significantly reduces those risks and provides a clear path for adoption. Okay, so that's the fundamental story. Now let's switch gears and look at this from a trader's perspective based on the numbers. The stock had been in a consolidation phase, trading sideways without a clear direction. The Amazon news provided the exact catalyst needed to break out of that pattern. The stock reclaimed its 50-day moving average, which is a key technical indicator of renewed momentum. The critical price level to watch now is the consolidation buy point around $48, which is the previous highs. A decisive move above that price would signal the start of a new upward leg and would likely attract a wave of momentum traders, confirming the breakout. The main short-term risk is the upcoming Q2 earnings report. A strong report with positive forward guidance could be the rocket fuel that sends the stock right through that $48 level. A disappointing report could cause a temporary pullback. However, because the long-term story is now so much stronger with Amazon's backing, many investors will likely see any dip as a buying opportunity. To bring it all together, Amazon's equity stake in IonQ is a foundational event. It's not just another headline. It validates IonQ's technological leadership and intertwines its future with the world's dominant cloud provider. This has direct implications for the entire tech sector. While there are always risks with new technology, the strategic rationale for IonQ has never been stronger. The fundamental picture is solid and the technical picture is constructive. As always, this is not financial advice. I'm here to analyze and present the data. You have to make your own informed decisions. If you found this breakdown useful, please consider subscribing. We're trying to build a community here that values data over drama. I'd be interested to hear your thoughts on IonQ in the comments. DataCat out, stay sharp and stay safe out there.